Good morning. It is November the 3rd, 2017, and we have our next to last unemployment report for 2017. Probably the biggest news day of the month. FOMC was pretty well discounted. Wasn't supposed to be much, and it wasn't. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. So today is a newsday trade. If you know the news, you take the trade before the news announcement hits, because there's absolutely no liquidity when the news hits. It just dries up. The news algos are the first to roll back into the market. Then the traders that read the headlines come in. And then 30, 45 minutes later, the investment committee, the guys that are the brains of the outfits, come up with their take on the numbers, and they adjust their strategies accordingly. Looking at the congestion area right here, we've got a B. The non-farm payroll is called 325. That number in and of itself would make you want to be short into the news, but that is a big number. 4.2 unemployment, hourly earnings plus 0.2, average work week 34.4. Trade deficit minus 43.4 billion. No one will pay any attention to it. Then we have PMI services 55.9. No one will pay attention to that. Then factory orders at plus 1.2%. That's a big number. And then another big number, ISM services at 58.6. Can have a whipsaw off of this, but this is number 1. This is number 2 in importance, and then factory orders would be number 3 as importance. But so if you know the news, you have to position before the market takes the news hit or the news arrives. Let's say in this case that the move is down. Our newsday strategy is you'll have a bar that forms. You'll have the mode mean, a limit sell inside whichever one's closest to you. In this case, a value area high, a limit sell against that. Or where the news hits, a limit sell. Quite often, it usually takes 2 to 4 hours, we do get back to where the news hit the market. So both of these values are in a high state of flux or moving quickly. We take a stab at it. We usually are a little bit off. We don't usually quite have the number, but that's what you do with raw data real time. And sometimes it works in our favor, sometimes it doesn't. So without news today, we would be selling 5s to 9s and 11 to 15. On the buy side, we'd be buying 29s to 01s and 21s to 25s without news. I'm prefacing that, okay? Looking at the 30-year, now we're at 15 right now, so 16 to 20 is number 1, 23, 27, sell 1, 3 to 7, sell 2. Got this high volume number here at 27, so a limit sell at 26 can work. Got a low volume number here at 12. So we'll make 8 to 12. Number 1, you can see right here, volume wise, we're dealing with a B. 29 to 01 by 1. 21.25 by 2. Again, there's just no liquidity. You cannot buy stop or sell stop into the particular trades. You fill at the worst price. Or it's been my experience. Back in the old days, you were instantly up or down $1,000. And there's a pretty nice trade if you're right. But if you were wrong, you were down $1,000. So it does carry extra risk. Gold will react to the news. Also, based on the news, you're a seller in front of the news. Okay, this is Frankfurt time. Everybody does a London split, but quite often the move now starts in K or L period, not just M. So again, it's a newsday trade, so right now we'd be trying to buy 70s to 72s without news. And then 65 to 67. Now on I've seen it everywhere, but a $10 fade on gold can turn out pretty nicely. But having said that, it can be $15. Sometimes it's 20 to 25. So because of the lack of liquidity in that market, the moves are exaggerated. 78 to 80, 83 to 85 for sell 2. All these numbers are based on no news today. But we have to keep our reference points going. We have to think about where these levels are. And over time, it will become second nature. The euro will react on a number like 325K. The euro should be lower off of that number. Probably have a little selling before the number hits. Now you can see the move started in L period right there. But there's the London split, and London is the dog for currencies. So 1682, so an 80 to 90 without news. Sell 1. 1710 to 20. Sell 2, again without news. 50 to 60 buy 1. And buy 2, 1625. 50 ticks is what we expect on a news reaction. So a 50 tick fade can work, but sometimes it's 100 ticks. Sometimes it's 150. And the reason for that is how currencies are played by the Forex market makers. There's a lot of liquidity as long as the market isn't moving in a very tight trading range. But you break that trading range, the banks shut their books. They let their resting limit buys and sells absorb the buying associated with that particular event. When all the buying and selling is done, liquidity needs are solved, then they come back and they're happy to make market with you. And makes for tougher trading. When the CME went to half ticks, that made them more competitive with Forex. And Forex, I mean with the banks, because they do respond to, I don't trade at the Forex market, so everything I'm talking about is second hand. But it's the world's biggest market, currencies. More trading is done in currencies every day than any other market on the globe. Okay, crude 55 and a quarter. That's where we were last night. We'll keep the same numbers. Starting to see quite a bit more fundamentally based articles talking about how supply and demand are coming closer together. And it started a couple of weeks ago with an article that China is running their historic inventories down. They're going to operate at a lower, so demand was better than China's imports would signal that it was, and that was the start of these articles. Then we had Saudi Arabia's, well, we'll roll over the current quotas for all of 2018. Might make them permanent. That was supportive. Then people are starting to talk about the growth of the world's economy. Looks like it's starting to accelerate. So there's been a shift in tone in crude oil is the point I'm trying to make. Well, Scott, on the note, anywhere from 30 seconds to 24. On the 30-year, anywhere from a half a point to a point and a half. So a point's a good fade on the bond. 20-30 seconds is a reasonable fade on the note. 50 ticks, 50 big ticks, reasonable fade on the euro. $10, 15 if you're a little bit nervous on gold. So that's and $10 on the E-mini seems to work pretty well. Well, we got a tight market, so resistance is 80 to 85 and support is 70 to 75. So a $10 fade would have you short at new highs at 88. And a play to come back and retest 85. A buy at 68 would have us long in this area right here, not quite where the value area low is. So maybe 67s are better on the buy. I don't think I'd make a new contract highs. I don't think I would be too big a hurry. But this is a big number. That's 325K. 4.2 stays the same. ISM's services 58.6. Factory orders plus 1.2. Could be a whipsaw if these two numbers are off. This is straight ahead, comes at 10. I think this factory orders number, I think it comes out at 10, but I'm not sure off the top of my head. Well, again, on the euro, you watch the euro trade and it does this and then zip. And then it does that. So all the liquidity is absorbed by their clients. They're not a market maker. It's all absorbed there, and that usually I don't follow the euro all that much. So when I've seen it on non-farm payrolls and unemployment, about 50 ticks. But I don't know. So without news, we'd be selling 79s to 81s. 84 to 86. Let them get stops above the current high. On the buy side, without news, I've got volume right here at 75, so 73, 75 buy one. Let them get stops below 75, and then 69 to 71 by 2. But that's without news. Okay, we're going to try to, we usually can pull it off, sometimes can't. Try to get a trade, Newsday trade in the bond and the E-mini to give you a flavor about how it's done on those two contracts. Sometimes we only get one off, but if we have a whipsaw on the unemployment and the non-farm payroll number, we usually don't do a Newsday trade, so that's the only caveat. Okay, it's going to take a bit to get everything up and posted. I'll be back for the little bit before the 8:30 news release.